Have I got a cracker of a report to share with you today? As you would have heard me talk on this channel, is that anything that's pretty much entirely supported by the debt will be highly dependent and solely dependent on the rate of that interest on the debt. And one of the things that we all know about, and you know what I'm referring to, is property. Now, watch these couple of reports as we go through them. They've come out in the last 3 or 4 days, so they're fresh and hot off the press.
Welcome. Tonight, the looming crisis facing debt-stretched households.
The nightmare scenario is where a lot of people need to sell all at once, and that's where you see a fire sale mentality.
Do you regret ever buying these houses?
Yeah, it was probably the worst decision I've ever made.
Also,
Okay, this exact next story is about a man, supposedly a farmer, who bought a few investment properties with a mentality, and I don't blame him because everyone's doing it, buying a couple of investment properties in a very remote part of Australia and hoping that this is going to work out. Now, bear in mind that this is during a boom times in property, so all you need it to happen is to start to stagnate, continue or start going down, and you don't need alarming figures of like 10, 15, 30, 40% property dropping. If it's not growing, seeing this is some sort of a Ponzi scheme where you buy something and hope that it's going to continue to go up, and it does, and then you sell it, and then next person comes in and with the same mentality. So once that actually just stops, it doesn't have to drop again 10, 20, 30, 40%. It just needs to stop going up and people are in trouble. So this farmer, his loan switches from interest only to interest plus principal, which is how it should have been from the beginning.
But for another ANZ customer, Queensland farmer Hugh Mackey, the switch could prove too much. He had been hoping to retire soon.
Well, I'm 61, so in my lifetime I was thinking 60 to 65 I was going to retire. But as things are going, I'm not sure I can even retire at 65. The way it's going now.
To try to fund their retirement, he and his wife Claire invested in the coal mining town of Blackwater in 2008, buying 2 investment properties with interest-only loans. But the town's rental market has slumped. Their houses have halved in value, and Hugh Mackey is struggling to meet his loan repayments. Interest-only loans. But the town's rental market has slumped. Their houses have halved in value, and Hugh Mackey is struggling to meet his loan repayments.
At the moment, with interest only, we're forking out, I think, approximately $30,000 a year of our own money, separate to the rental income, to not default on the loan repayments.
This week, the loans are switching over to principal plus interest, meaning he'll have to find an extra $12,000 a year to cover his mortgages. He's yet to speak to the bank.
If it gets serious and ugly, I presume they can probably bankrupt me. I don't want that to happen. I don't know. I can't see an easy solution, but and in the meantime, I want to keep trying to pay the repayments, and I'm in effect borrowing money to continue these repayments.
Haven't spoken to the bank? I mean, I'd be talking to the bank and saying, what can you do for me? Oh, not very much. Okay, you can have these properties and see what you can do with them with half the price. I mean, I know it's not as simple as that, but Jesus, I mean, half the price? What a disaster in some mining town, Blackwater. What sort of rental property are you, or rental income do you expect? You know, it's actually sad.
Hugh Mackey is not alone. The Reserve Bank estimates that $360 billion worth of interest-only home loans will roll over to principal plus interest in the next 3 years. For the average borrower, that means about $7,000 a year in extra repayments.
$7,000 a year extra repayments for a borrower who's already stretched. Now, this report from 7:30 report ABC was titled Debt Bomb. This really is a debt bomb, and it started in 2018. So what do you think is going to happen next?
That can see their monthly repayments increased by about a third. And so that's a big strain for a lot of people. And in terms of cash flow, that's very hard for a lot of people to meet, particularly if they're overstretched.
Economist Richard Holden says at the same time it's become harder to refinance, with banks applying greater scrutiny to people's debts and spending habits. Those borrowers who can't refinance could be forced to sell.
Could be forced to sell. This is they'll be stuck between the rock and the hard place. That's the only way to see this, and they'll all have to sell at the same time. This is really an alarming report.
The kind of nightmare scenario is where a lot of people need to sell all at once, and that's where you see a kind of fire sale mentality and could see very significant downward pressure on prices that puts the banks under stress and their balance sheets under stress, and it could lead to significant financial instability.
By 2015, interest-only loans had grown to almost 40% of outstanding housing credit in Australia. In March last year, the regulator, APRA, put the brakes on, limiting interest-only lending by the banks to 30% of new home loans.
I love it. I love it. This is how Australian regulators control the implosion, really. From 40% that we have now, they've limited banks in borrowing interest-only loans to 30%. Like, that's a big cut back. There shouldn't be more than about 15%, in my opinion.
It's been characterised as a crackdown, but Australia is still exposed. In the UK, less than 18% of home loans are interest-only. Interest-only loans in the US played a role in the global financial crisis, and lenders there have only recently started offering the loans again, but with extra safeguards. It's a story that may not end well for many Australians, like Hugh Mackey. Even if he sells both investment properties, he may still owe ANZ $250,000.
If they take that debt, which they're entitled to do, then basically we'll end up with no assets and no cash at that time.
Do you regret ever buying these houses?
Yeah, it was probably the worst decision I've ever made.
What a stupid question, but I suppose being a journalist, you have to ask it. Would you buy it again? Would you buy something and then see its value half? I think the answer is no. Alright, next story about Sydney and Melbourne property. What a surprise on this channel. You will love it, however. I promise you.
Not a rout, but a retreat. Sydney and Melbourne driving the fall in national property prices. And a super idea on infrastructure. How industry retirement funds are cutting out the middlemen. Economists were sent into a quandary by the Reserve Bank Board's latest missive today. In the minutes this month, the board omitted its reference to the next interest rate move being up. The line that says members agreed that it was more likely that the next move in the cash rate would be up rather than down, that's been in the last two statements, is now gone. Some economists are viewing this as a sign the RBA is becoming more cautious. It comes as experts are calling the end of the property price boom. Sydney has recorded the first annual fall in 6 years, with Melbourne posting the worst numbers since 2012. And the biggest markets are leading the country down, with national prices on the slide. Auction clearance rates are telling the same story as banks continue to tighten lending standards and a glut of apartments hit the market. Here's Carrington Clark.
Oh, glut of apartments. I can attest to that. You just have to ride. I ride a motorbike, but drive around Sydney and just see rows and rows of brand new apartments, scaffoldings being raised and built in most unusual locations that you'd expect, next to the busiest highways and tunnels and bridges and overpasses. I suppose if you only believe that the property is going to keep going up, you just buy it anyway as some sort of a safety deposit box for international investors, really Chinese, who have, by the way, pulled out of the property. So I really don't know who's going to buy it. This is going to be a disaster. Sorry about the gloom and doom. It shouldn't be. I've just come back from a holiday, so I'm all relaxed, refreshed and alert, but this is just not looking good. I'm just looking at these reports and watching them as you are, and there's no other conclusion you can draw. But keep watching.
It was a perfect day for an auction on the weekend in Sydney's sought-after Inner West, and there had been a lot of interest in the house.
There's a lot of competition here.
Sought after Inner West. If you don't live in Sydney, Inner West is congested, small, there's no parking, everything is expensive, everything's small, old, most of it is moldy. Well, look at this property. Just take a little care to look around what is being offered here and what the asking price or guide price is. I believe that they're going to talk about that.
I mean, I heard there's 10 people that registered, so it's, yeah.
But these homeowners know it's a difficult time to be selling.
We're quietly confident.
Bid for the third.
But they didn't need to worry.
Sell it at $1,701,000.
The house going for more than $200,000 above reserve.
Sold your way, sir. Congratulations, well bought.
But official ABS...
Yeah, that's your backyard. I think that's pretty much the house that they were buying. That's kind of a, if you can call it backyard, I think it's just side of the house. And that's about what you get for $1.7 million in a congested, small, smoky inner west of Sydney. Or inner city, I think they called it.
Data shows just how unusual this result is. The numbers show the property price boom is over, with prices falling 0.7% nationally in the first 3 months of the year.
That's probably the difference to a year ago, where perhaps people were, I guess, still frenzied regardless of what the property was, where it was.
Blacktown is 37 kilometres northwest of Annandale.
Yeah, all right. This is another happy story. But in any case, I mean, I am making the point here that the property doesn't have to drop by 10, 20, 30%. All it has to do is stop going up, and many people will be in trouble. Not to mention that interest rates going up are not going to help it, and they are internationally.
But its property market is a world away. This apartment has been on the market for 8 weeks with no offers, and on this Saturday morning open house, no interest.
In real estate, we say you only see serious buyers on rainy days, and we haven't been seeing anybody on the rainy days. So with the warmer weather, we did expect a couple of people through today.
This is just one apartment building in Sydney's west, but agents tell me it's indicative of what's occurring in the broader market. A year ago, there was a frenzy as buyers desperately snapped up property, scared that if they didn't do it then they'd miss out. Now, it's become increasingly difficult to move property for the price that sellers want.
Exactly a year ago is when Chinese stopped buying in Sydney, bottom line. That's it, because the government put in measures where it's just not good for them to do it, not wise financially.
I don't think we've seen anything yet. My expectation is that home prices will continue to slide over the next 12 to 18 months. And, if you're thinking of a quantum, it could be 15 or 20% off the top.
The tightening up on interest-only loans and on improving, lending standards and reducing leverage rates. And that just cools and takes the heat out of the market and naturally pulls prices back down. So, yes, definitely past the peak, I'd say.
But it isn't a consistent story. While Darwin, Perth, Melbourne, Brisbane and Sydney residential property prices fell during the first 3 months of the year, Canberra and Adelaide rose, and Hobart continued to surge.
Those cannot continue the trajectory that they're on at the moment, whilst the major markets are actually going into reverse, and as the credit tightening continues.
The ABS data is 3 months old, but more recent numbers aren't promising. Auction clearance rates have now fallen to their lowest level since 2012, with just 53.8% resulting in a sale. That's about 10% lower than a year ago. Despite property prices falling, property construction continues to boom. The risk is that when apartments like these are finished, it will add to supply and cause prices to fall even further.
Absolutely.
There's another 200,000 units due to come on stream over the next 12 to 18 months into a market that's already falling. And my own view is that's just going to add more fuel to the fire.
1640.
But falling prices aren't bad news for everyone.
Remember, it wasn't that far long ago.
Oh, it's a good thing.
About housing affordability. That was the number one political issue 2 years ago.
Oh, okay, so it's
House
good.
prices were rising
Lovely.
too quickly, so we shouldn't fret
Ah,
Just
excellent.
because house prices aren't
Oh, we're
rising
good
at
to
the
go
rate they
then.
used to,